Nigam, Head Equity at Peerless Mutual Fund, joins us on the show right now. Amit, hi, afternoon. What, according to you, has caused the nervousness of late in the market? Would it be something as near term as maybe just the June expiry or the RBI diktat on banks? Or would you say it's more to do with GST uncertainty and how it's all going to play out, the transition that is?
Yeah, hi, good afternoon. I think you have more or less spelled out most of the reasons which we could think of. And if I could just add one more, the discomfort of the higher valuations probably is what is causing this nervousness. So had the valuations been, let's say, at -1 standard deviation compared to +1 standard deviation today, given our 10-year average, probably the nervousness would have been far lesser. But the nervousness is being manifested because we have so many uncertainties, and primarily I think it is happening because of GST. We are seeing a lot of apprehension amongst the industries, the trade, where they do not know as to how things are going to pan out post 1st July. And something far more important is how is the services sector going to be impacted, because I think we all discuss a lot about the product side and the impact of GST, but what we don't discuss so much is the larger part of our economy, and that is services, which is actually going to see a lot of complications going ahead.
Amit, much contrary to popular belief, SBI Chief Arundhati Bhattacharya says that the recent RBI diktat is not going to deal a significant blow to banks as such. Do you still think that there's reason to worry about, maybe not for SBI, but for other banks?
So NPAs is what we are talking here, and that has been a large problem for quite some time. And Aisha, if we understand this a little bit deeper, then an NPA not solved today keeps the problem keeps becoming bigger and bigger as the time passes, because the interest component of that loan just keeps getting added to the principal amount which is sitting, until and unless the bank decides to recognize it as an NPA, as a problem, makes provisioning, takes a haircut, whatever is the mode of solving it. So if you're not solving a problem, it's like not taking care of a disease in your own body, and that disease just keeps getting bigger and bigger. So NPA problem is, we're still not behind it. Some of the banks may be having enough capital to provide for the losses occurring due to these NPAs, but I cannot say the same for all the banks. So there are certain set of banks which are not as deeply capitalized to take the full brunt. So it is a cause of concern, and therefore, well, we select banks for our portfolios, we pay a lot of attention to such details.
Amit, I just want to, again, talking about GST, you have been one of the market participants who firmly believe in the structural shift from unorganized to organized. Which sectors do you think are going to be able to capture that shift in the most profitable manner?
We will see that happen, and we will see it across businesses. Leave out certain sectors where the organized is very large. So if I can just give you an example today, auto OEM. So for example, let's say the car manufacturers, they are 100% organized. There you will not see any shift. But when we are looking at auto ancillary companies, especially the ones which are supplying to the spare market, let's say, they are the ones who are going to feel this pain. And that is the space where the organized sector is going to gain market share. Now, the good thing here is that the disruption which will happen will be at the maximum starting on 1st of July. So the companies which are prepared to handle GST, they have already ensured that their ecosystem, which means their distributors, their retailers, are on board, will be the ones to take off immediately, gain as much market share as possible, and then try and build upon it. Because remember, in any business, the key to profitability over longer term also emanates from how much market share that player is enjoying in the market.
So at Peerless right now, how is it that you're positioning your portfolio? Are you upping your cash levels right now? Are there any new additions that you've made in your declared portfolio?
Aisha, the way we manage our portfolio is that it's a completely bottom-up stock selection process. We never take cash calls. We generally maintain about 4 to 5% cash, and the reason for that is simple: that if any of our portfolio holdings is down significantly for any reason, and we still believe in that business model, and we think that the price correction is an opportunity to add, we use the cash for the same. Otherwise, the way we have constructed our portfolio is that we look very carefully at the kind of businesses that we are owning in terms of profitability, both historical and also the outlook for the next few years. Management integrity and capability are two very other important points which we focus a lot while selecting companies. And after having done that, we have a portfolio of about 32 to 35 stocks on an average in our different schemes. So that's how we select, and at this current juncture we are not significantly changing our cash positions. We are maintaining about 4 to 5%, and any such corrections, for example what we have seen over the last 15 odd days, where mid caps have actually corrected far more than the headline Nifty or the Sensex, we use that cash adequately to increase our investments.
Okay, Amit, great speaking with you. Thanks much for joining in today. With that, we're going to take a very quick break. When we come back, a big exclusive voice interview with Jayant Sinha coming up.